Okay, we're ready to get going here. I want to say welcome. This is Mary Ellen McGonagle, and I'm the founder of MEM Investment Research, and I'm really excited that you could join me today. I look forward to helping you become more knowledgeable about momentum stocks, and I'd like to help you learn how to uncover these stocks and then trade momentum stocks. As many of you know, these stocks have a tendency to outperform the broader markets, so it is definitely a skill that you would like to get in your tool belt, so to speak. So what I'm going to do is share with you some of the key ingredients in momentum stocks, and we'll go ahead and look at several examples. But let's go ahead. Pardon me, I have a little bit of a head cold, but I'd like to go ahead and get started and give you a little bit of background as far as who I am. I do have over 25 years experience in the institutional investment world. I started out at Goldman Sachs on their trading floor. It was definitely a fluke. I had a friend who was starting her own employment firm. She was able to, through her connections, get me into the company, and it was just an incredible experience. I was on there, as I said, trading floor, lots of action, lots and lots of money being traded, so I knew I had found my new career. I did from there go to what is called the buy side, and I worked with a very, very large institutional insurance firm, and I started out as an assistant to their portfolio manager, learning the ropes, and I was able to move up the ranks there to the point where I was heading a trading desk. I was managing $2 billion in assets. It was fixed income, however. At that time, it was not equities, but again, very, very exciting time. This was during the 80s, and it was a period where information still was being shielded from individual investors. If you ran a lot of money, you would be that first phone call with any kind of news. There wasn't the ability for the internet to get the news out to everyone, but certainly more recently with the SEC stepping in and with news traveling quickly, I think it's a really exciting time for individual investors to be in the markets. You now are on a much more level playing field, and I think also importantly, you have the ability to get in and out of stocks quickly. These big institutions, they are not. It will take them several days to unwind or even gain a position, and they're just not going to have that ability to be quite as nimble. They also have a lot of eyes looking over their shoulders, so any moves they make can and often will be questioned. So I was running money for about 8 years, and then after that I moved out to the West Coast with my then new husband, and I joined William O'Neill and Company. For those of you that are not familiar, William O'Neill was the founder of Investors Business Daily. I was with the institutional equity sales side for 15 years. Vice president, I traveled the world teaching the O'Neill methodology to portfolio analysts as well, managers as well as analysts. And during that time, throughout that time, we were required weekly to study thousands of charts, looking at history, what drives these big winning stocks. And that's what we're going to be talking about today. But more recently, I've started my own investment firm. I do still work with institutions. However, within the last year, I've broadened that out so that my research work is available to self-directed investors. And that's exciting to me, to be able to share my many years of experience. Our newsletter does provide an outlook on the broader markets, but also each week We have ongoing additions to our suggested holdings list of stocks that are exhibiting positive technical characteristics. They are strong fundamentally, and we've had many winning stocks on that list. It's a highly performing newsletter. So before we begin, if you want to just take a few minutes to read this, there's only one sentence that I feel is most important, and that is that the presentation is for educational purposes only. I will not be recommending to buy or sell securities, and that's the primary item in this disclaimer. So let's go ahead and get started. I mentioned that I would review what we will be covering today. And the first item we'll review is what are momentum stocks, and I'll get into a description, describe to you which types of stocks tend to become momentum stocks. The next item that we'll go ahead and go over is what are the triggers that create a momentum stock. A stock will oftentimes just be moving along with the markets, or in some cases underperforming the markets, and then suddenly the stock picks up. So we'll review these triggers. I've identified 5 of them, and we'll go ahead and go over each one. The next thing that we can review will be how you can screen for these momentum stocks so that you can get in front of them prior to or even during their moves. Oftentimes many big winning stocks have multi-year moves. If you don't get in right away, you're not out of the game, so to speak. There are often second and third and even fourth stage bases where you are provided with the opportunity to participate in that stock's uptrend. And then the fourth is pinpointing buy and sell signals to improve your profits. And one thing I do want to point out, if you're not already familiar, momentum stocks, they tend to move quickly, and they move quickly both on the upside, but also equally and even more important, they will move quickly to the downside. It's often called fast money that is in these stocks, and the reason I'm pointing that out is you don't want to stay in these stocks too long. You want to have very, very strict stop losses depending on your appetite for risk. And also on the upside, you don't want to be chasing these stocks. You will be provided with opportunities when they pull back to execute entry points. And then lastly, we will go ahead and use history as a guide, and by that I mean that we are going to be looking at historical stocks, and some of these are going to go back a few years ago. They're all intended to educate you and really show you what these momentum stocks are all about and what, again, those triggers are, so that when you start screening for them and you start reviewing your charts, you can have this these historical stocks charts to use as a guide for you. So let's go ahead and start here at the very beginning. I mentioned that we would be reviewing what are momentum stocks, and quite simply, these are stocks that are outpacing the broader markets, and usually it is by a wide margin. When these stocks have established an uptrend, oftentimes the stock will continue to trade upward, and then of course until that uptrend is reversed. And these momentum stocks, they can be any market cap, but they do tend to be high growth, and by that I mean strong earnings and sales. They're growing quickly. And that said, I will say there is a sweet spot, or certainly an area of the markets that does tend to have more momentum stocks, and that is small cap growth. This is something that's come to light over my many years. The reason, of course, these smaller companies are going to be able to put bigger numbers on the table as far as earnings and sales. We're looking at year-over-year year comparisons. Smaller companies will have a smaller comparison, but that doesn't mean that a lot of large cap stocks aren't momentum as well. And if they're able to put those numbers out there. So we'll be reviewing both those various market caps. And so just as a for instance, if the broader markets are up, say 0.5% on the day, many times momentum stocks will be up double that or more. Some people refer to them as high octane stocks. And so if you can really time your entry properly, as an investor, you can really be handsomely rewarded. The next item here is what are the triggers that will move these stocks? There are catalysts. As mentioned, I've been reviewing charts for over 20 years now. A large part of my work at O'Neill, we were mandated, and I loved it, to review thousands of charts over the weekend so that we can intelligently speak to our clients, so that we could pick up on which stocks are exhibiting momentum. And to this day, I still review hundreds, thousands of stocks over the weekend with that same eye toward identifying these big winning stocks. So as I mentioned, these criteria that we'll be reviewing, I have identified 5 triggers. They are time tested, and over the years they continue to work. And these are the same triggers that helped identify Apple in the 90s, for instance, more recently this year, NVIDIA, NVDA. So we'll go ahead and review those triggers. And then what chart patterns work the best? This knowing chart patterns and how to read them is going to be critical. It's going to be a very critical component, because when stocks begin their momentous moves, the stock will be emerging out of what we call a base. That's a technical chart pattern. It will be emerging out of that base on volume, and the uptrend will begin. So you really want to become very adept at learning how to read charts. I have other webinars that really dig in and help provide insights for that, but it is a critical component. So let's go ahead and we can look at these 5 triggers that jumpstart stocks and turn them into momentum stocks. And I will say the order that's listed is order of importance. So this first item is strong earnings. And many of you, if you read IBD, you'll know that, or if you've read any of O'Neill's books, it's time proven going back to the beginning of the last century. The evidence of strong earnings, either existing as well as estimated, is going to be the key driver for these stocks. So it is far and away the biggest driver. And what we are looking for, most momentum stocks, particularly larger cap, you want to see at least 20 to 25% improvement in quarterly as well as annual earnings, and this is versus that same quarter or that same year ago. Your biggest winners will, of course, have stronger earnings, some cases triple-digit year-over-year growth, and we're seeing that now as a, for instance, with Amazon. Their estimates for this year, I believe, are over 300% over last year, and that's huge, particularly for a larger cap company. So the stronger the reported earnings as well as the estimated earnings, the higher your return will be. Now that said, you will want to have a bull market as your backdrop. This is when momentum stocks do perform the best. There's no doubt that a strong bull market will be a time period when these stocks come into their own and really do well. Now, it doesn't mean that in bear markets you still can use that system, but it is most effective when we are in a bull market, and the demand for the stock should remain high as long as the company can continue to produce these strong companies. And so, for instance, a lot of companies that started out as IPOs and are now household names, such as Facebook or Tesla, they initially, after their IPO, had price histories that were really lackluster and outside of their initial IPO charge. But really, once these companies came in with their first real quarter of positive earnings, that's when their multi-year momentum moves really began. And as long as they continued to report strong earnings, the uptrend generally stayed in place. So this second trigger that really, again, can jumpstart an otherwise mediocre stock is what I call the release of a revolutionary product. And usually this will be a new product that will have high demand, and this high demand will in turn drive sales. And that sale, of course, high sales in turn will provide you with the earnings backdrop that will propel these stocks. So as an example, a revolutionary product might be a fully electric car. I mentioned Tesla before, and that's a big driver. More recently, over the last couple of years, there have been the introduction of robotic machines that can do surgery. ISRG, Intuitive Surgical, is a company. So here they're coming out with these revolutionary products there, and these products, again, are in high demand, which drives earnings. So that is something that you would want to be on the lookout when trying to find momentum stocks. And then the third item is it ties in with the previous one. And again, I talked about producing a high demand item, but for this third one, I'm talking more about entire groups rather than just one individual stock. And as an example, I would point you more recently to the very high demand that we've been seeing in semiconductor chip stocks. For those of you that are familiar, there is an index, the Philadelphia Semiconductor Index, that has been just charging to new highs each week. A lot of these semiconductor stocks provide products or chips that that go into these mobile electronics or gaming consoles. A few years ago, a high demand item when it was first introduced was cloud computing, and you could have found any number of momentum stocks within those groups. However, within these group moves, you want to be in the leadership stock, and this leadership stock will have the highest momentum. And I will point you back to number one, that strong earnings. That's going to be your big driver. That's going to be the identifier of the leadership name in that stock. The other identifier is a high RSI or relative strength. In other words, it's charging ahead of the pack. It has more strength relative to its peers. The fourth item is the company introduces a new way to provide an existing service, and this is something that has been prevalent throughout time. I would point you, for instance, back to the 1960s when McDonald's, which is now, of course, a household name, but in the 60s they introduced the concept of fast food, and over a 2-year period, this stock increased in price 2,000% because the high demand, this new way of existing a product, providing an existing product. And then in the 90s, we had the introduction of laptop computers. So this provided computer users with a way to carry their computer instead of being tied to a desk. And there were many stocks in the 90s in the laptop computing space that went up thousands of percent. More recently, I would point you toward the use of DNA. Over 15 years ago, that was introduced as a way to treat cancer. Many of those stocks went up, and I think you should be getting the idea. The fifth trigger is more on the negative side. So the first four, we're talking about triggers that will get you in front of stocks starting to begin an uptrend. This last item is a negative events, and these negative events, of course, can easily reverse your downtrend. One of the most, or one of the worst events, if you will, is if a company reports earnings that are below analyst estimates. A lot of times you might be tempted to stay in a stock after that, but I will tell you, statistically and historically, you are not paid to stay in a stock if they come in below estimates. Doesn't mean you can't revisit it, the company, when the earnings come back into favorable position, but if a company reports negative earnings, you're better served to move your money elsewhere. Other negative news, of course, can be increased competition or newer ways to provide services. An example now would be, of course, we've seen a great downfall in department store stocks as internet shopping takes hold. These brick and mortar companies are failing. So you will want to pay attention not only to headlines but really to your chart, because oftentimes the chart will tell you that a potential negative event is coming. The chart will reverse before the news comes out. So let's go ahead. Another thing I wanted to point out to you is we talked about pinpointing your entry and exit points. And of course, as in any kind of stock trading, this is critical. So a couple of items I did want to point out to you. When I talked about stocks being technically sound, the chart looking constructive in the sense that the stock was moving out of a base, but I also wanted to point out that that initial breakout of the base will occur on volume. You want that surge on volume. It's indicating that institutions are in there buying the stock. These are the guys that are going to move the stocks, and you want their buying power behind you. So that initial price action should occur on volume. That's why there are a lot of up on volume screens out there to try and help you pinpoint stocks that could be potentially beginning an uptrend. And then the second item is, of course, overlaying indicators on your price chart. We will review that as well. These indicators are going to be very useful in helping you determine whether your stock is still in an uptrend or has the momentum stalled or in some cases reversed. And this last one is having a system to maximize profits, and that has everything to do with making sure you have stop losses, making sure that you don't stay in the stock too long, that you keep your profits, more importantly, that you don't take heavy losses. I mentioned these stocks do tend to move faster, so you will want to have a system in place, stop loss, or perhaps you use options to help protect you from potential downside. So let's go ahead, and I mentioned we would review some examples. This first company is NVIDIA, and what we are looking at here is a daily chart, and I'm taking you back to February of this year when the stock, I talked earlier about volume being that first catalyst of a stock that's beginning a momentous move. And in this case, the company reported positive earnings, and you can see this big gap up on volume, and that's telling you that very, very easily something positive could be going on with this stock. And this second gap up, again, earnings related. You can see how powerful a positive earnings report can be. You want to see this big volume, and indeed it is the precursor to a big move up. Now let's take a look at this very same chart, same time period, but now we've overlaid some technical indicators, and I will not go into deep precision as far as what they are, but I'll explain. This top part here is what's called the RSI, and it is a relative strength indicator that's taking the closing price of the stock divided by, in this case, 14. So we're looking at a daily chart, so it's taking 14 days of price activity. And this is your net neutral. You want this smoothed out line to cross above that zero line, and that's indicating that your relative strength has turned positive. The other item that I've overlaid here is what's called a MACD, and it uses exponential moving averages. This dark line is your MACD, and you want to see crossovers, as well as, this also has a net zero, as well as an entry into the positive. This crossover is your early indicator, and this is your confirmation as it comes up through the zero. So by overlaying, for instance, you may have run a screen on this day and seen that NVIDIA hit the up on volume screen. Well, that's interesting, but now you want to put together that information with confirming chart. Pardon me, as I get back to where we were. Yeah, so you want to say, okay, it's had this big price gap up. That's interesting, but how does the chart look? Does the chart look constructive? And it does. One other thing I use heavily is moving averages. And when you have these faster moving stocks, your 10-day moving average is going to be really, really helpful in identifying buy points and entry points, because you will have stocks, as they move quickly, they will get extended, they will move a bit further away from that 10-day. You want to wait for a pullback to that 10-day. And again, the 10-day for my work is used primarily for entry and exit, primarily entry points. As far as determining the trend, whether it is still in place, the uptrend, I look to longer moving averages. This blue line is your 50-day, and this is your 200-day. So I'm going to use the 50-day. As long as that's in an uptrend, yes, the stock can pull back, but if it finds support here, I'm going to stay with the stock. Not always, but for the most part. And indeed, this second time, it may have hit your screens again as it gapped up in price. And when you can put it together with an RSI that's trending positive, as well as a MACD, then you know that you're in a stock that could easily have a continued upward move, as NVIDIA did. And NVIDIA, since this initial gap up here, has more than doubled in price. So that's the kind of stock that you want, the kind of characteristics and triggers that you want to see when identifying these momentum stocks. Now, I talked to you before about earnings being the driver, and this, of course, is Tesla. They did come public about a year prior to this, and the stock had an initial surge, but then it was meandering sideways. And this Q1 of 2013, the stock came in with their very first quarter of positive earnings. Now, to point out to you, what we're looking at here is a monthly chart. The only reason I did a monthly is so that you could get historical sense of the stock, as well as the extensive move the stock had afterward. Of course, on a weekly, you would have been able to ideally get in earlier, rather than wait for the end of the month. But indeed, you can see the volume. The stock emerges out of that base on volume, and then this during this particular period, over an 18-month period, the stock, Tesla was up 460%. So even if you captured a small part of that move, you would have been well served. And then here's Intuitive Surgical, and I mentioned this stock earlier. What we are looking at here again is a monthly. And again, the reason is because I wanted to point out to you that how, yes, earnings are the primary driver, but you can also look at news And when you can put the two of them together, it really can be very, very powerful. So I'm taking you back in this case to 2004. And again, this is a company that had IPO'd prior, but this mid-period of 2004, the company did produce its very first positive quarterly earnings. So the stock, as you can see, emerges out of a base on volume. The company is now positive. What was happening prior to that is the company was not, they were looking for FDA approval for their robotic technology for various procedures. So then they did come in with this first quarter, and then they also, during this period, did get FDA approval, which really propelled the stock beginning in that mid-2004 up to the end of 2006. It was a huge move. But let's take a look. I mentioned to you there are, of course, times when negative news will hit a particular stock. And in this case, this is the very beginning of 2006. The company reported earnings that were below estimates. And I mentioned to you, generally, you're not served to stay with the stock, and indeed, this was an 8-month period where you could have put your money to work elsewhere while the company got its act together, for lack of a better word. But here we are in the late 2007, and the company did come in with huge earnings. Unfortunately, this move was stalled by the 08-09 collapse in the broader markets, which hit pretty much every stock, but it did then resume, because of this huge earnings, it resumed its uptrend. And then here we have a period where, again, poor news fundamentally. The company came in with revenues that were lower. That in turn translated to earnings that were below estimates. They also had a period of patent lawsuits. So they had some of their robotic surgical machines were not operating properly. So during this period, I'm hoping that you would have noticed that the RSI appears you're overbought is beginning to trend downward during this whole negative period. You also have a negative crossover in your MACD. So price-wise, as well as your technical overlays, are telling you that this stock the uptrend has reversed, and it's time to move on. Now, of course, more recently, the stock has come back into favor. They're reporting strong earnings, and you have the technical overlays to support that. So here's a company I'm sure many of you are familiar. It's Southwest Airlines, again using a monthly that's going to take us back to 2007. And I talked about news being a driver prior to earnings. And in this particular case, in 2011, Southwest Airlines came out with a 5-year initiative to turn things around. Many of you may remember it dealt primarily with high customer service, and as well as acquisition of other airport entry locations. So during this 2011 period, they came out with the announcement. The stock kind of falters, but hopefully it would have maybe hit your screen and you would keep an eye on it, so that once this initiative starts to take place, and then the positive results from those initiatives start to kick in, then you want to keep an eye out for that turnaround. And so it did take 18 months for the initiatives to start to have a positive impact. The earnings hit an all-time high here in 2013, and hopefully you can see the stock emerges out of a base on volume. It breaks up above these key moving averages. Your RSI and your MACD turn positive. So that is the kind of move. There are other companies that have put in place these 5-year initiatives. PLCE is another one if you wanted to look at that historically and see from the time of announcement to the time of actual positive results you will be able to technically get in front of these stocks that are making changes that will help their bottom line and in turn turn them into momentum stocks. And Southwest Airlines was up over 250% during that this 2-year period. And here's one where we're looking at strong earnings, net teas, and this is one that has been on our idea list for quite some time. I'm taking you to the beginning of this year, back to the beginning of this year. This is a daily chart, so each bar represents 1 day of price activity. And back in this March-April period, technology stocks started to pick up a bit. And net teas is one that was a little later to the party, if you will. During this period, it was trending down. Your RSI was in negative territory, as was your MACD. But take a look at what happens here in the beginning of May, when they report their second quarter earnings. The company did indeed come out with very strong earnings. So you have many factors and triggers coming into play together, all initiated by a strong earnings report. So the stock reports the earnings, it emerges out of this base on very strong volume. Again, interesting, but let's look at the other overlays. Yes, your MACD is now crossing into positive territory. Your RSI is trending into positive territory. So each of these signals would combine to get you into this stock in May, and it's gone on since then. It's still on our list. The other thing too, I talked about using this 10-day as a buy signal. It does get extended here. This June period was a difficult time for a lot of tech stocks, but as long as this longer-term 50-day was in an uptrend, this stock is still going to look good for our work. So here we are. Let's take a look at putting momentum together with the chart. So what we are looking at here is a weekly chart, and we're taking you back to the beginning of 2016 to more recently the end of June. So what I wanted to point out here is Amazon more recently, of course, has been very strong, but in the beginning of the year, well, it certainly was it had its period last year where it did well, but it of course faltered with the broader markets. And what I did want to point out here is the stock is during this 2015 period, it created a saucer or a base pattern, and the stock then comes out of that base on huge volume. And again, this was driven by earnings, and this pickup in volume, as I've indicated before, is telling you that institutions have really picked up their interest in this stock, and it's going to be an indication that there is a potential move ahead of it. So this is 2015 to 2016. Many of you may recall what was termed the FANG stocks, and that was Facebook, Amazon, Netflix, and Google. Those were your 4 winning stocks last year, and by paying attention to this type of coming out of a base on volume on earnings would have gotten you into Amazon to participate in that move last year. So another item I did want to point out quickly is identifying stocks that are bucking the trend, that are showing strength even though the broader markets are in a downtrend. And the reason I did want to point that out to you is oftentimes your biggest winning stocks out of a bear market or after a correction are those stocks that have held up the best. In other words, they're going up. They don't care that the rest of the market is faltering. And indeed, this is taking us back to this period here. the broader markets did finally turn here, but prior to that, the stock was just ignoring the rest of the market and going up. And Coach indeed did go on from that 03 to 07 period to be a huge winning stock. So that's another important point in trying to identify momentum stocks. And here we're looking at Biogen. And this, again, is a monthly chart that's going back to the 99 period. So at the end of 1998, Biogen came out with very strong earnings, and the stock went on to have an 1,100 price improvement during this period. But take a look at how it's behaving during the bear market. It's going down not quite as much. And then, of course, what I would like to show you here is during the 08-09 market collapse, this particular stock was pretty much bucking that downtrend. It was trending downward with the market but not getting hit quite as hard. And so that when it did emerge out of this multi-year base, it was the beginning of a very, very big move. You have your MACD trending upward as well, so another signal. I won't review everything on here, but you will be provided with a copy of this webinar. And the reason I'm saying that is because this is Amazon. It's a weekly chart, and I wanted to point out to you that every single box here is a different momentous news release. So the CIA adopted their web services here, which promoted this move. Unfortunately, they did come in with earnings that were below estimates, and that was the beginning of a downfall. But I would urge you to take some time and review this, because a lot of people know Amazon as a retail company, and they are indeed huge, but one of their bigger drivers for earnings is their web services. And pardon me, they do a lot with cloud, and so back here in 2015, they were making these announcements that they had 1 million active customers in that web services, and so forth. So I would urge you to take the time to review this further, because you can see indeed how earnings and how news can drive momentum one way or the other for various stocks. And then when you marry it with the technical overlays, it's a very, very powerful, informative way for you to trade. Very quickly, this is Chipotle, and as many of you may recall, they had a difficult period last year when they had that breakout with the virus. And what I wanted to point out is that in this particular instance, the stock in the beginning of 2016, in a very surprising move, was bucking the downtrend that the rest of the market was experiencing. So you might think that's a clear-cut sign of strength, that this stock could be bought, but indeed this is where the technical overlays are going to keep you out of this stock. Two things in particular: your longer-term downtrends, despite this upward move and bucking the broader market's downtrend, are very clearly in downtrends. You want your moving averages to be trending up. And then also your RSI, which had gone down, never turned positive. So we like to call this a head fake. So again, using those technical overlays so that you don't get into these stocks too early. And this chart is, we're looking at Sonic Corporation. This is a daily chart from the beginning of this year. And I'd like to point out to you that this stock indeed was looking very promising in the beginning of this year, because it did emerge from a base. It broke up above key moving averages. It did so on volume. RSI turns positive, your uptrend on your MACD is positive. So a lot of reasons that you would get interested in this stock. And let's take a look at this gap up here. This is earnings related, another strong positive. But here is where you can, again, use these technical overlays to give you a sense that the stock has stalled at the very least, and indeed your uptrend had reversed. So what we have happening here is your RSI starts to trend downward. It's not always the end, but when it gets into negative territory, that can indeed signal the beginning of the end. When the stock price breaks below a 50-day or longer term moving average, that is a very definite reason to get out of a stock. Your MACD, which was starting to trend negative, turns negative. So, and then lastly, your shorter term moving average crosses below your longer term. So now we have 4 reasons to exit the stock. And what I again wanted to point out to you is how you can know when that uptrend and when the momentum has ended. So let's go ahead and review some conclusions. I talked about this quite a bit. Knowing how to read charts, it's a really critical, it's an important tool, particularly when you are trading momentum stocks. You need to have a very, very deep bench as far as tools so that you can, again, pinpoint those entry and exit points. I talked about having a system in place, again, to minimize your losses and protect those profits. And then know yourself. If you're devoted, do the work. Look at these charts historically. Trends do tend to repeat themselves. If you don't have as much time and you do want to educate yourself, I would say subscribe to a newsletter, our weekly Edge report. We do all the work as far as screening, but more importantly, when we put stocks on our list, we are highlighting it, we are marking it up, telling you why the chart looks constructive to us and what is attracting us to that stock. And that's just a wonderful way to learn so that you can then move on and ideally do the work yourself. I mentioned, I believe, at the end that I would have a special offer, and what I would like to offer to you today is a very, very expanded version of the 5 key traits of these big multi-winning stocks. This is going to be complete with quite a few more examples, and it will also have different traits than those that we discussed today. There's that one ingredient that every big winning stock needs to have. So if you are interested, there is a link. This is an item that is normally $300, and today it is only $39. I would love to see you take advantage of this offer so that you can educate yourself even further so that you can really get adept at trading these big stocks. So I'm going to go ahead and see if we have any questions. Let me. Okay, so there is a question. Someone, Edward, you were talking about, you remember the big green chart books? Yes, they were a precursor to my arrival there. I worked with big, what were called maroon database books, and they had over 2,500 charts, and just wonderful way to wrap your arms around where the markets were and where the strength was. Oh my gosh, Edward, you worked with Jim Miller, sorry. I'm excited because I was his partner. Jim was my mentor, and he is a proud grandfather. I still speak to him regularly. So now NVIDIA, yes, Edward, the gaps that we were looking at on the chart that I was showing you were due to earnings releases. The semi-log charts, I was using candle charts, so not quite as not quite as effective as log charts, but those log charts are not available to everyone. Richard wanted to know if there'll be a replay because you missed some. And yes, you will receive a copy of this to your email that you submitted. Don wanted to know, do I short any stocks? Yes, I have been known to, but I will say my bias is more toward identifying stocks on in uptrends. But our newsletter, we will point out stocks. I work still with hedge funds, and of course they're always hungry for short ideas. So yes, shorting is definitely in my wheelhouse. How do you play with stocks during the rate hike? Well, I'll tell you, the rate hike is beginning. It has begun. You will see effects, and we are on top of it, always prowling for sector rotation. We've of course seen this week financials move up because of the move in Treasury yields, and so we watch the markets and are very adept at getting in front of these stocks that are going to be impacted, or the opposite, from the potential rate hike. And KM was asking about using it to trade options. Yes, we do have many clients that use our ideas, and they then use them in their options trading. Doesn't have to be strictly buy and sell of individual stocks. And then Samuel wanted to know, does using the MACD and RSI always work? Well, I wouldn't be telling the truth if I said that every indicator always worked, but I will tell you a hint, or a secret if you will, and that is that generally speaking, you want to have RSI, MACD, and moving averages, and you want to have at least two of those three indicators providing you with a signal. And that signal is going to give you, or the combination of those signals is going to provide you with the confidence. But I use them because I've found over the years they are very effective. I'm not going to say that absolutely every time. We've had many, not within our list, but in the broader markets, big surprises. We've had, a Bristol Myers where they come out with an announcement about FDA approval, and the stock, every technical indicator in the world goes out the window. So I don't know. It looks as if there are no further questions. I would also urge any of you that are interested to go visit my website. It's meminvestmentresearch.com. I do have a free ebook on there. You can also get more information about the newsletter. And for those that are interested in getting the newsletter for a 1-month trial for only $7, you can reach me at my website, and I'll go ahead and provide you with the promotional code to get you on our list. So if there are no more questions, I will sign out, and I want to thank you for joining me today.